Afternoon all, how are you all doing? Trying to get out of this DAX. Stuck today. Totally stuck. Can't do anything with it. Being a pain in the backside. One sec. Okay. Yeah, so basically DAX today didn't go anywhere at all. So we literally got hedged this morning. Broke down, hit the pre-market low, bounced up, hit the pre-market highs, sat around for a bit. So I decided to get out as we started to push back up, thinking we were going to make a new high. It didn't. It pulled back down, and then it put in a lovely great hammer here. So I added, and I'm still in it. So I'm going to close it all out in a minute just before the New York Open. But I was just seeing if I could squeeze a break even out of it. I got to $585. So I was about $200 down on the trade, but it's dropped again. So I'm just holding on to it in the hope that I can get out, but unlikely. How are we all doing? Fletch, Mark, Danny, Lynn, Crom, Gregors, Martin, Monkey, Julio, Derp. How are we doing? Christian, Dion, Brian. Thirsty Thursday. Early for that. Afternoon IT. Yeah, DAX. So basically, I'm just going to watch this. The EA is going to close out automatically. I was just going to say on this candle anyway, as it did. So I will hold these two. So basically, 840 loss. I can lock in 270 to bring that down. So I'm just going to see. I put a 90 trailer on it. Let's see if we can get you never know, you might get a run at the open. If we get a bullish run at the open, basically I might make a profit on it. I'll just move the TPs up there. See what happens, but at the moment that's a loss. Right. So this morning we've had, or rather this afternoon, we've had the unemployment claims come out as expected. No difference at all there. So slightly up on the unemployment figure, unemployment claims. So this yen's been mental today, isn't it? Yen's crazy today. Just a massive drop. 225 ADR across the board, pretty much, if not more. That's 275 ADR on the Swissy. Pound yen 225. We're about 250 on the pound yen. We're about 250. New Zealand yen 200. US yen 225, and it doesn't look like it's stopping. So this was basically the Japanese came out last night and said they're likely to increase interest rates for the first time in 6 to 7 years. So they're going to bring it from a -1 to a 0 or a +0.1. Which is neither here or there, but the market seems to have gone mental over it. It's literally taking you from being here for 6 years at -0.1, taking you up to a 0 or a 0.1. Whoop-de-doo. Everybody else is sitting at 5s and 4s. I've no idea why the market is so excited about this, but they are. And it is going mental. So, who knows? So all the ADRs today, pretty much, apart from there's a few of these Aussies and stuff. Aussie's been rallying like a crazy beast today as well. Are all yen-based. So Australian dollar, massive rally today as well. The upside. Swiss franc, very, very, very weak today. Very weak. Which is helping my US dollar Swiss long. But not enough, because the US dollar isn't really doing an awful lot at the moment. So that one's kind of, it looks like it might go today. We've just broken out of this high, and it rejected these highs immediately. And I was like, oh, here we go. just going to push up and then reject. It is pushing up again. So I'm hopeful I might be able to get out the US dollar Swiss today. It's going to be 125 ADR is my exit. So it's going to need to push some to get me out, but we'll see. Right. There we go. No other news this morning. So we had the jobless claims. That was it, really. So the entire morning's been about the yen. And I'm not trading the yen at the moment, so I don't care. Let's go DAX. Come on, Daxy. Okay, so I'm trailing the DAX. I might get out of this morning, you know. Might get out of it. Euro Swiss ADR. So, yeah, we'll look at the US indices, see where we go with those. We've got 1 minute to the open. Just watch the open. Pop that down there for a minute. US indices are rallying off the back of that news. So the unemployment claims coming out has made the indices have a little bit of a push pre-market. Not massive, but it's a bit of a push. We're approaching ADR on the NASDAQ. We are almost ADR on the Dow, on the S&P rather. We're miles away on the Dow. So the Dow has been a lot more contracted than the S&P and the NASDAQ today. So big moves on those two. We are obviously approaching extremes. So we need to be a bit careful with longs on these today, but the market is rallying like a crazy beast at the moment. So we'll see where we go. If we get a big, strong push out the highs, that's going to help my NASDAQ trade. If I can get breaking even on that, will be lovely, but we'll see where we go. Afternoon, Amy. Afternoon, XRUpdate.news. Afternoon, David. Sorry, I've got a really sniffy nose at the moment. Long on the Dow, short on the NASDAQ. Interesting start. No trade on the S&P yet. We're up at ADR as well. We'll have a look at all these on the hourly in a minute. Let's just watch the open. See where we go. Long on the S&P. So I'm going to get hedged on the S&P or the NASDAQ today. Because if that's going long and that's triggered short, either that is going to go long or that is going to get dragged short. Dow's obviously broken to the upside. DAX is running, which is nice. So DAX, nearly break even on the DAX. Nice to get a break even on that. Be nice if the indices run today. So having a quick look at the hourly, Swiss yen 150 of its weekly. We are on Thursday. So a lot of these yens, I don't buy this yen move at all. Don't buy it. I think this is coming back. I wouldn't be surprised if Monday next week we're up here. There's absolutely no reason for the market. If you look at the interest rates on the yen, oh God, I have to do a search on this. GPY, none. Under inflation? No, it's not under inflation. Let's do all. Oh my God. Sorry, let me just try and find. There we go. So if you look at the inflation for the Japanese yen, we've been sitting at negative 0.1 back to 2016. So that is 4, 5, 6, pretty much 7 years now. We've been sitting at negative 0.1 interest rates. They do not use interest rates as a mechanism for controlling inflation. Yeah, they just don't do it. So why would the market suddenly go absolutely mental and get overexcited if they suddenly put their interest rates from a negative 0.1, which has been at for 6 years, up to a 0? That's a 0.1 increment. Yeah, every other interest rate that we have in the world moves in 0.25 increments. So they're not even moving in a normal increment that the rest of the universe uses. Why on earth would the market get so excited because they came out and said that last night? So this is a reaction to this. It's not even red news. Yeah, it's a reaction to this comment they came out with last night. Somewhere around here, I can't remember where it was. I've gone back too far, but it's somewhere around there. There we go. Whether to keep the interest rate at 0 or move up to 0.1, at what pace short-term rates are likely, So basically saying we're going to change it next year to either a 0 or a 0.1. Whoa. So I just don't understand why it's so big a news. I've never... Mind you, I haven't really traded through an interest rate period in the yen. I've been trading for 15 years. I don't actually remember, because I wasn't following fundamentals back then at all, interest rate changes on the yen anyway. So maybe the interest rate changes on the yen are absolutely cataclysmic. I don't know. But this seems like a massive, massive overreaction. Anyway, we'll wait and see. Out the DAX. So $470 loss on that one this morning. About to hedge on the Dow. NASDAQ, I am hedged. That's unfortunate on the Dow. And we're up at ADR. God, this is a right mess today, isn't it? Be nice if this runs today. So, yeah, I was going to look at the Audis, wasn't I? So Dow, obviously we are now on day 3 sideways. We've just taken out today the previous day's low and yesterday's low. So we closed short yesterday. Second day on the trot, we've closed short. We just about closed short there. We definitely closed short there. We just about closed short there. So the market basically has stalled out for 3 days. This looks like massive rejection. This looks like it's going short today. I'm hedged on the Dow. So yeah, I mean, that propulsion gap's held proper, hasn't it, from yesterday? So looks like we're going short today. Impossible to pick a place short. The propulsion gap is ADR. I doubt whether ADR would hold because we've got that low just beyond ADR. Other than that, you're looking at 300 ADR or something to the downside today. This thing's due, you know, the mother of all drops. Yeah, we're down here somewhere. So if this does go short, it's very hard to get out because you've got no idea where it's going to stop. S&P, we're totally sideways on the S&P now. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11-ish, 12 days, 2 weeks, totally sideways, not going anywhere. We're up at ADR today. So all we're doing is when we are moving, we're moving roughly an ADR up, down, up, down. We've moved roughly an ADR up. So your upside potential on this today is 175 ADR, which is yesterday's high. Other than that, it's just going to come back down and test the pre-market low today. So we've got these lows down here, which are roughly ADR, which is pretty much pre-market lows. So really, really hard to look at any of this today and have any idea where anything's going. We're at ADR. Chances are it's going to drop. If it does rally beyond ADR, 135, 140 ADR upside is your resistance. So, but I think it's probably going to be a hedge on everything today. It looks like a mess. So hedge the NASDAQ. S&P looks like it's going to drop. Dow's already dropping. So 4 loss day today by the looks of things. But really hard to pick a direction on these or an exit because everything is got to go beyond ADR. And when you start getting beyond ADR, it's literally support resistance. So you just got to look for areas. So upside resistance for me is going to be 3.5 on the NASDAQ. Downside resistance support is yesterday's low, which is just over 4R. And getting on for ADR to the downside. So hedges today, I'll be looking to get out there. And I'll be looking to get out there on the NASDAQ. DAX I'm already out. S&P, I mean, where'd you go to the upside with that? 200 ADR, yesterday's high. It's ridiculous, isn't it? I'm not hedged on this one, so target would be good for a start. We'll see if we get where we go with that. Dow. I mean, this Dow is because we're just basically in a sideways move. So where we are, 5R, which is ADR, is probably a good downside target today. So I'll leave that there, just above that low. Basically, this is one kind of big propulsion gap, but that's not really an accumulation. So this is just a strong move. And that was an end of day move as well. So it was the last hour of the day, they just basically bought the crap out of it. They tested it the next day, rebought it. So, you know, we got buyers here. So if we get to ADR to the downside today, we'll probably get a bounce, whether it holds or not. We'll have to wait and see when we get there. So ADR to the downside, upside. It's too far to go. But obviously you're looking at yesterday's high, which is that big all-time high up there. So ADR today is there, which is this high. But that's only 2R to the upside. So watch for price action there. But tough today. Real mess that's opened up, isn't it? So we'll see what happens with the Dow. That's the only one I've got today that I'm not going to get hedged on. It's going to be a tricky afternoon. Whoops. Right. So while we're waiting for this to sort itself out, and probably get hedged on the S&P. We'll have a look at the FX side of things. So US dollar Swiss is going nicely. There we go. So we are breaking out that high. Just going to move my TP down slightly. I will probably get out of this before it gets to TP. But we'll see if we can get an extra. It's not much. It's only a quarter of an ADR is all I'm after. So I'm watching this low here, double bottom, which was resistive. So I'm looking for a test of that level, which is just under that propulsion gap. That's my exit, which will be somewhere in the region of 0.5%. So that brings me up to 0.7 or something on the day, something like that. And then I've just got to deal with this Euro CAD, which I can't get out of at the moment. So it isn't moving. So all these yens, up to you what you want to do with them. I'm not going to trade anything to do with the yen. It's Thursday. I'm hoping to be finished tomorrow and jack it in for Christmas. So I don't really want to get involved in anything from a position trading perspective. From a stop loss based perspective, however, everything that's extended beyond 225 ADR, which is every yen, bar the New Zealand dollar yen and the Aussie yen, because the Aussie's been strong today. Each of these potentially is a lovely V-shaped recovery. Yeah. So we often get with these big, strong moves where we get these knee-jerk reactions from the market like that. We get these V-shaped recoveries or A-shaped recoveries. Yeah. So the market goes mental and then it goes, actually, yeah, no, I see what you mean. That was not really what we thought it was. So there's every chance that this could be one of those. If you're going to take this long, I would do it using a stop. Not that I ever recommend using a stop, but if you're going to do it, you don't want to get on the other side of this train. If this is a steamroller and it's just going to collapse for some unknown reason, you don't want to be in it. So these are potentially nice reversals. If you look at the 15-minute time frames, or 5 minutes, really. Any reversals that you get on these with a stop loss at this extension, it's either going to do that and it's going to chop you out and nothing you can do about it, or it's going to accumulate and then start to grind back up either later today or tomorrow. There's no more news catalysts today to drive this market in any direction. So where are we there? So you're literally in the lap of the gods, basically, as to whether or not it pulls back on that. So tomorrow we've got non-farm payroll. the unemployment figures for the US. So that's basically your main catalyst for driving everything tomorrow. So when that US moves, the yen is going to move as well. So if it sits there and accumulates for a bit, it'll pop. So we'll see what happens. But they're all good opportunities. They're all massive, massive extensions. There's not really any reversal that's gone in yet on any of these. Don't know who that is. Not talking to you. So that was your reverse alert. Didn't trigger. Push down. New low. We've now got the reverse alert down here because we've made another low. So this is going to be your first reversal alert on M15 on the CAD yen. Swiss yen. You haven't had a reverse alert on that one either. Euro yen. Haven't had one on that. Pound yen. No. So literally, first opportunity you get for a reversal. It's a bit of a mess, isn't it? I've had one today, yeah. I mean, it's just not giving any reversal alerts yet. So the first one you get and take could well be start of that V-shaped recovery. If it is, it's a massive money earner, isn't it? 200 ADR. So see what happens with those. The other ADRs we got are the Aussies, Aussie CAD. S&P's stalled out at the highs. Looks like a short today. We'll see. Aussie CAD, that's hit ADR. So you haven't had a reverse alert on that yet from ADR. So we've just hit ADR recently. Reverse alert's all the way down there because it's had that big spike up. Aussie dollar Swiss. So the Swiss franc today absolutely collapsing. So big run against the Swissy there. We're 150 ADR. Your reverse alert's not going to be till down there. So that's half an ADR. Not a great entry. It needs to basically stall out, put a new high in and get a nice tight reversal. Nice tight M pattern up there is what we're looking for. Aussie dollar, US dollar. Again, Aussie dollar's had a decent rally. That's pushing off of that high. Euro Swiss. There we go. There's ADR on that one. So again, your reversal, that's going to be all the way down there. But this is the Swiss franc. Again, massive weakness in that Swissy. Pound odd. Australian dollar, very strong today. So you've got a reversal opportunity there. One's just about to trigger, hopefully soon. Not much distance on that one, though, before you're going to run into some resistance. Good support there. That's going to get tested. That propulsion gap and probably turn into a bounce. New Zealand dollar Swiss is the other one. So loads of opportunities on ADRs. They're all still valid, most of these as well. So 5 minutes. You can take any of those, really. So lots of opportunities on ADRs, but just be careful of these yens. I really don't know why this move is so aggressive. It's very big move. S&P looking for short around 58, 40, 50, but look, I can't even talk. 45.85. Oh, you're short already. Oh, no, you're not. You wanted it to push up. Yeah. I'm going to get hedged on this. This is a short today, by the looks of things. It's going to wipe out half my month, this one today. Not a lot I can do about this one today. I'm just going to have to watch these hedges and see how they play out. But very messy open. Always tricky when we're close to ADR. Yeah, always tricky when we're close to ADR because you know the market's exhausted. And if it breaks long, you got to say it looks like it wants to come down. There you go, hedged on the S&P. So locked in basically 5.5% today. Nothing much I can do with that. Deal with it later. RSIs, all yen, basically. So Aussie yen, CAD yen, Swiss yen, Euro yen, Pound yen, New Zealand yen, US yen. The only thing we've got extended, which is not a yen pair, is the Euro Swiss, which is a 4-hour RSI. Massive extension to the downside. which has been embedded now for pretty much a week down here. So we got extended. I got out of it on Monday because I just didn't like the euro. It is having a big push now, but it's nothing to do with the euro. This is the Swiss franc weakening, which is pushing up. So I was talking about this morning. People that were saying, about the euro and putting back on this. Doesn't need the euro to strengthen up this to pull back. It needs the Swiss franc to weaken as well, or instead of, or both. You get some strength on the euro at the same time as you get the Swiss, you're going to get those big moves, which is why the Swiss yen today is the biggest drop of the lot, because the Swiss is weakening at the same time as the yen is strengthening, so you get twice as much movement. So yeah, I'm not really getting involved in these myself, but you have to say extensions like this don't come along very often. However, that should also be a warning. They doesn't do this very often. There's something going on, isn't there? This close to Christmas as well. But whenever you see a move of this magnitude, don't forget the banks and institutions are short. They want to get out of this at some point. It's how much they're going to get out of. That's the question. If they only want to get out of a tiny little bit and add, you're just going to get a flag. So, not the best position trades in the world, I would say, today. So there you go. Everything's mental today. Can't really make head nor tail of any of it. And it's non-farm payroll week. So we are going to get potentially another massive move tomorrow. So we will see what happens. Why have I got China on there? I thought I'd taken that off. Oh, I took the Swiss off. Wrong one. I'm going to say. Don't we have China news on there? See what these are doing. Not a lot at the moment. So if I missed, but is there a reason why the Swissy is falling? No, I can't see anything. They're just unwinding the Swissy, basically. No real reason for it. I suspect it's something to do with this yen move. So the Swissy and the yen are both safe havens. So I would suspect that money has been pulled out of the Swiss franc to be put into the yen at the moment. Because you've got to, if you're going to invest this much money in the yen and buy this much yen, you've got to use money from elsewhere to buy it. Yeah, there's an infinite amount of money that you have to deal with. If you've got it sitting in there, there, and there, and there, and you want to put it there, you've got to pull some out of the other places to put it into this one. So I would suspect that it's just being pulled out of the Swiss franc to be put into the yen. So if this yen pulls back, you probably find that Swissy will revert as well. But you've New Zealand yen 225 ADR now. So there you go. There's New Zealand dollar yen 225 now. So the only one letting the side down is the Aussies. Come on, the Aussies. Why are you not 225? Everyone else is. On its way. Pound yen 175 of its weekly. That's a massive move. 175% of its weekly range. Massive move. Look at that. You got some good support levels coming up as well on some of these. New Zealand yen 125 ADR. Huge moves. What about tomorrow's yen news? What's that? I can't see any yen news forecast. We've got the Economy Watchers sentiment at 5 o'clock tomorrow morning. We've got GDP figures. There's nothing that I'm aware of for the yen. Yeah, if it's yellow news, it's irrelevant. Doesn't do anything. Same moves as yesterday in the NASDAQ. Gap up and then sell off. Could be. Looks like it's wanting to sell off at the moment, but it's not really gone anywhere. It's just pulled back. It's just pulled 50% of that move back, but we haven't really gone anywhere. S&P hasn't gone anywhere yet. All the Dow's done is really just push out the highs and the lows, and we're sort of hovering. So doesn't seem to be an awful lot of directional bias. I wouldn't expect there to be a massive move today because it's non-farm payroll tomorrow, but we'll see. If we can get down to pre-market levels, I'll be watching those, but it's just a whitewash today. Happens. Got ADR on the DAX, 1198. ADR on the DAX, 1198. $11.98. Oh, pips, you mean? Yeah. Yeah, it'd be roughly that. Yeah. All brokers are going to be different. No one's going to have the same price. Unless you're on the same broker with the same data. Took a break even on Aussie Yen a couple of days ago when it first got extended. Good job. Yes. Well done. So, yeah, if you took the H1 RSI extension, yeah. Monthly range has just been hit on the Euro Yen. We are on the 7th of the month, and we've just hit the monthly Euro Yen. It's done its monthly move. Probably actually today, isn't it? Not today. So where's there? So that is the normal monthly range of the Euro Yen. Now complete. 620 pips is its normal monthly range. It's done that in 7 days. 5 trading days. Huge. Huge, huge move. Something is going on. Steer clear. This close to Christmas, just don't want to get involved. Either take a stop loss base trade and risk it, or stay out. Stuck in Euro CAD and Euro US. Everything else closed. Cool. Euro CAD. Yeah, that's the one I'm in. So we're stuck sideways at the moment with 5 days sideways on this one, or 4 days sideways. So we're not going anywhere at the moment on the euro. I'm hoping that we get negative numbers on the US dollar tomorrow. That's really the saving grace on this one, I think, at the minute. I think I'm just going to get out of this US dollar Swiss, you know. I'm just taking the US dollar Swiss off. Just going to bank it, basically. Puts 0.5% in the bank. Means I've just got to worry about this. So basically, Euro CAD at the moment, all I'm looking for is some negative news tomorrow. If we get decent numbers down tomorrow on the unemployment rate, or rather higher unemployment than expected, that'll be negative US, which will be positive Euro CAD because it will be negative CAD. So hopefully tomorrow we get decent negative numbers on the US, and that will help this one drive. The other thing we've got on our side for this one basically is oil at the moment, which is incredibly weak, which is going to help the euro rally as Canadian dollar will drop. So we just got to hope this oil price keeps holding down, and it doesn't look like it's able to get any momentum at all. So if this can keep coming down, that Euro CAD's going to keep rising. So will the Euro US as well. So of the two, of all the Euro pairs, Euro US and Euro CAD, I think are the ones that are going to be easiest to get out of. But we'll see. Any forecast on potential depth of pullback on Euro Swiss? No idea. you're pulling into this accumulation. So this propulsion gap, it's not a very good propulsion gap at all. It's part of an A-shaped recovery. Look, so it's a real mess because of this is all news basically. So it's a real mess because of the news. So we started selling off into it. Obviously, that level there is where we hit, we bounced, we came down, slammed through it, we hit it, rejected it, we hit it, rejected it, we slammed through it. You know, so that is really your first stop, 125. If it breaks that 125 level, which it's going to probably bounce there and then crack through it, I would imagine, if it's going to be able to get through it, you're looking at that news move, which is where they initially started selling off, which will be, it's a very ugly 38 retracement because of all this crap around the news. So I'll be watching 125 ADR for a bounce. And then obviously, if it does break that and it doesn't reject it and just go into a range or put a new leg down, then you're looking up into there somewhere. It's just ugly. There's no obvious levels on this, really. That's not bad. Top of that propulsion gap. So there, somewhere out of there, or somewhere out of there. But it's got to get there. So we need that Swissy to carry on selling. Pound US dollar is paying for your breakfast. That's good. If it's only paying for your breakfast, how are you going to pay for lunch, Franco? Pound Swiss looks interesting. CAD Yen RSI extension. CAD Yen. That didn't I? Yeah. CAD Yen. 18. So these are all below the 20 now. A lot of these yens. Pound Swiss. Big rejection on the pound Swiss, but the Swissy's being run over, so be careful. The other thing, obviously, bear in mind with the Swissy, if they are pulling money out the Swissy to put it in the yen and they decide, actually, no, we don't like this yen move, they're going to put it back in the Swissy. So this is all going to come back down again. So just be careful. Bit of a weird move, this. I don't really understand this move, so be careful with it. Long pound and pound yen looking short. Yeah, everything yen's looking opposite. How much stop loss should one have on such a move? So if you're going to trade these yens, give it a quarter of an ADR to half an ADR. Yeah. So look at this. Always, whenever you're putting a stop loss in, look at the size of the move and look at the expectation. Yeah. So the tighter you have a stop, the more chance it's going to get of getting hit. If you put your stop right under that low, and basically that isn't the low and it needs another leg down, you're going to get stopped out. Yeah, this has moved down, the pound yen, 225, 250, 275, about 275% of its average daily range. If it's even going to pull back 50% of that, you've got 125% of ADR back to the upside. If you put a quarter of an ADR stop on that, or a half an ADR stop on that, that's still going to give you a 2-to-1 or a 3-to-1. So don't go super, super tight. Give it a quarter to a half an ADR. Give it a chance to stop and have a think about where it wants to go today, and then potentially pull back tomorrow. Yeah, it may well just fly back. They might suddenly go, whoa, we didn't really mean to do that. They may sit here and accumulate. If they're going to accumulate, it's going to move up and down somewhere around about a quarter to a half an ADR in a range. So if you put your stop loss half an ADR on this is 58. So where you are now, that's 63. So somewhere around there, from where that is, that's half of an ADR. Look how much movement you've got back up to where this move started today. And look at your stop loss at half an ADR. That's half of its average daily range. At the time, we just move up and down within that sort of range. So, you know, don't get too aggressive on your stops because you're just going to get stopped out. And don't put too much risk on it either, because you are basically standing in front of a steam train with your hand up going, oi, stop. Steam trains don't have good brakes. That's a steam train. I should wake up early regularly. Good scalp profit today. Good, Doug. Yeah, well, I mean, you can't make money on these sorts of moves, can you? If you're going the right way. I might take one of these yens on a Heikin-Ashi reversal. You know that Heikin-Ashi is basically, think of Heikin-Ashi, right, as blurred candlesticks, right? So what you're doing is you're taking a candlestick which gives you a definite price action and tells you who's in control, and you're blurring it out and making the wicks bigger to make it look more weird. How does Heikin-Ashi help you in any shape or form? It's awful. It's the worst possible charting system on the planet. This, I can tell exactly who's in control, where the orders were, how many orders there were. I can tell everything. You stick a Heikin-Ashi on top of this, I ain't got a clue what's going on. Like a total mess of price action. I get it. It's like, oh, it hasn't changed color yet, so I'm not going to go in. But by the time a Heikin-Ashi candle changes color, you've missed it. You've missed the move. It's already gone. In a massive squeeze on the euro-yen pairs. Mumo, you've been coming in here a long time. What have I been saying for the last 4 weeks? Do not long against the yen. Sell. Everything against the yen. There's either an intervention coming or a massive pullback because the market cannot push it any further. You should at no point ever be hovering anywhere near a buy button against the Japanese yen. I've been saying it for weeks. Bars are the best. Banks don't use candlesticks at all. Banks use area charts most of the time. Well, the wicks still show you highs and lows. It depends on the type of Heikin-Ashi you're looking at. There's lots of different variations of Heikin-Ashi. But yeah, I can't look at a Heikin-Ashi chart because I deleted them from my charts many, many years ago when I realized how much they skew your view of price. Ryan's got the symmetrical triangle indicator on the NASDAQ. Can't see any symmetrical triangle there. It's a mess. Pushing up again. Wants to go long again. A lot of volatility coming in as well. What a mess today. Look at it. This market today is one of those days where you look at all the charts and you go, haven't got a clue. Utter lunatic mess today. This year has been all about conquering fear for you, Franco. Turned my trading around and given me confidence. Excellent. Balls to the wall. Good job. Banks do not use useless candlestick charts. No, you definitely do not. Ask Nirav. He used to work at Barclays in the postal office. And he knows all about useless candlesticks. He will show you the candlesticks inside the useless candlesticks. Those are the ones the banks use. Not anyone in banking that I know anyway. But then again, I don't know everybody in banking, so there might be some desks that use useless candlesticks, but not the ones I know. What is lunative? Google gives me crazy. What? What is lunative? Lunatic? 1 minute, Brian, you're looking at, are you? Oh, God, I don't go down that low. Yeah, 1 minute, there's a symmetrical triangle. There was a symmetrical triangle pattern on the 1 minute there, which has just broken high and is now going to fail and go short. I have no idea what's going on with this today. It's an absolute mess. This is the beauty of hedging. Yeah. I am in this And I have the privilege now of sitting here and just sitting and waiting for something to happen. I have not got stopped out, not sure. Let me trade this for a minute. Stopped out. That didn't work either. Let me go short on this. I'm still short and I'm not going anywhere. That is what normal trading is like. Beauty of hedging is you sit here and you go, you decide where you're going to go. And when you start going there, I will look at where you're probably going to turn around. That is my privilege. If you don't turn around, fine. That's my loss. I don't have to worry about it. So much nicer, isn't it? Tom, second day live on SAH. Think I'm going to head back to the market reversal. Yes. Lunatic. Lunatic fringe. What? I don't know what you're all talking about. You've all gone mad. You get days like this. There's just nothing you can do about it. These are the days, you just have to take on the chin. If the market is going to sit here and go completely nuts like this, you just have to wait for it to decide what to do. That's the beauty of it. We've got time to plan now. So you've got a plan. Yeah, my NASDAQ plan is if you go there, I'm going to get out. If you go there, I'm going to get out. If you don't do either of those things, fine. You're not going anywhere, are you? If you're not going anywhere, I can't make money anyway. So looks like it's going short, though. There's a lot of wicks. Looked like it was going longer a minute ago, didn't it? That symmetrical triangle break. Mess. All a mess today. So yen is stalling out a little bit. Last 15 minutes, we seem to have slowed. This could just be a flag forming, though. So be careful. You're about to get a reversal alert on the US dollar yen down at 225 ADR off the monthly low. New Zealand dollar yen's just flagging. Pound yen is flagging. So is the euro yen. Look at that euro yen. Look. Shows you how weak this euro is. Some big drop. Going to be difficult to get into something like that. Swiss yen, same thing. Aussie yen starting to move back. CAD yen, you're just about to get a reversal alert on that one because we've just put in a new low off the back of that order, and we've basically gone bull, bear, rejection, inside bar, break, reversal alert, off you go. So CAD yen is starting to make its move. So that's going to be your first reversal alert on these yen pairs. US dollar yen's getting close as well. So US dollar and the CAD starting to fight back a little bit. Who knows? Good go. Afternoon, Mark. Been doing some testing on H4 engulfings on the DAX. Probability of bearish engulfings reaching 0.5 range is only 46%. Yeah. Engulfing candles are a waste of time. They're not a waste of time. They work 50% of the time. So as long as you can get a 2 hour out of them or a 1.5 hour out of them, it's a strategy. But look at the opening range, for example. If you look at the opening range on a half-hour chart, you get one of those, then you get one of those. So you go short, and then it does that. You've missed the move. That was it. Just don't work, really. Not that I found, anyway. I've built a lot of EAs around candlestick patterns. The Price Action Toolkit will trade the candlestick patterns for you, bullish and bearish engulfings. You can test it on that. They're okay, they work, but you've got to be able to read price action with that candlestick pattern. Bullish and bearish engulfings at support and resistance, much better odds, because you're getting to a point where we previously sold from, and you're getting confirmation there's more sellers coming on board. But within that bearish engulfing, you'll have a reversal alert on a lower time frame as well. So it's all the same stuff. bearish engulfing on a 30-minute time frame has got a 5-minute reversal alert in it. It's all the same stuff. You were saying next year you were looking to reduce your position sizing account and increase the SIH. Just because it's doing well. So I'm doing better scalping. I'm not doing better scalping. It's just another. I want to put more money into this because it will give me a decent return. Because with the stock index Hedge EA, when you've got bills to pay, it's nice to get the bills paid quickly. Yeah. So, you know, let's say your outgoings are $5,000 a month. Yeah. I've done 4K here in 3 days. You can do that. You can stop and you can use that money to pay the bills, and the position trading is bunts on top rather than having to rely on one strategy. I'm just trying to diversify a little bit more next year. I'm also going to look at a hedging strategy next year as well, which is going to be kind of a little bit like position trading. It'll be a slow burner. It won't produce massive profits. It will produce 5, 10, 15% or something a month. Very similar to position trading. But I want to diversify more because at the moment, if you look at what's happened this year with the markets, and the best way to look at the markets is to look at the stock markets. This is basically this year. The norm is this. We had a year of utter lunacy, and now we've gone into a year of what the hell. Everything's changing. And we've got all sorts of things changing over the next year with this, the BRICS thing, where the weighting is going to change, I think, with the US dollar, which means that will upset the FX markets, volatility levels, and all sorts of stuff. So I just want to get a mean reversion strategy in place, a scalping strategy in place, and a sort of higher time frame strategy in place so that it doesn't matter what the market does. If it squeezes the positions, the scalping will pay. If the positions are all working brilliantly, the scalping pretty much pays all the time anyway. But I want something else which is going to be able to take advantage of trend breakouts, which is what hedging does. So with a hedging strategy, the one that I'm developing basically, if we get a nice clean breakout and into a trend, it makes a fortune. If it gets a breakout which fails, it hedges it and waits for the next breakout into a trend. So it's the same as position trading. When you get into the hedge, you might be sitting in it for weeks. If you get into it and it doesn't, you just literally bank 1 or 2%. If you can run that on 6 to 8 pairs, you're going to be pretty much banking 5 to 10% a month. That plus position trading plus this is 30% a month, which is kind of what I'm looking for. Don't forget I'm 50 now. I'm getting close to retirement. I've got to start banking some bigger money. One of the other reasons I'm looking at diversification is because I haven't been able to run the S&P strategy for 2 years now. So my S&P strategy, which I turned off here, Aussie CAD 125 ADR, I didn't run it during the bear volatile market because it doesn't work in bear volatile. This was what looked like it was going to start back into a bull calm market, and it failed, and it's gone back into what looks like the start of a new bear volatile leg down. Now it's started this unbelievable rally that we've had to the upside, which doesn't look like a bull calm and doesn't look like a bear volatile. What's this? We haven't seen anything like this for a long time. So, you know, look at the confusion in the markets at the minute. You've got to be able to adapt. And again, I keep saying it. there isn't an EA you can put on a chart that's just going to know what to do in these things. You've got to look at what's going on in the markets and go, that ain't going to work anymore. So you've got to diversify, which is what I'm doing. They all work. All strategies work. It's just I get the feeling that position trading is going to struggle. This year's been good for position trading, but there's been a lot bigger losing months this year than I've had before, and that's because we've been on an 18-month interest rate rise. We are just about to start an 18-month interest rate decline. So I'm assuming that we're going to replicate what's happened in the last 18 months. My position trading earnings have been down, which is why I've gone into scalping in the last year and a bit. And that's doing really well. So I get the feeling I'm going to have to keep doing that. I just don't want to rely on scalping because you can go into some bad runs on it. It's very high risk. If you want to make decent money on it. But I'll update on that in the new year. That's what I'm doing over the next 3 weeks, is just getting my money sorted into where I want it, basically. And then come back refreshed. Oh, outro. Basically playing failures on in engulfings. Yeah, that'll work. But think about it though. A failed engulfing will work 50% of the time. If engulfings work 50% of the time, how often are the failed ones going to work? Roughly. If it's an edge, use it. If you can find an edge, use it. Something I was wondering, let's say a position gets really super out of hand. Is there a percentage point where you'd go screw it and take the big loss? Yeah, somewhere around about 8 to 10%. I did it this year on oil. I had to take a loss on oil. I've taken a couple. Pound US dollar. I took a 6% hit. Paolo, is there no way to automate the Forex Hedge YouTube strategy? Nope, because it's discretionary, isn't it? There's a guy that does a hedging strategy on YouTube, but it's discretionary. Yeah, you can't automate discretion because discretion is you. You can automate rules, but with hedging strategies, when your hedges get extended, you have to work the hedge from the inside. That's discretionary. There is no way to work an inside hedge mechanically because you have to decide when to execute the inside hedge. So what do you pick? You have to decide. Yeah. This is where hedging goes wrong. This is the problem with hedging. And this has always been the problem with hedging and why I've not done it. Where I looked into it massively. I built model after model after model with hedging to do with position trading, to hedge the failed positions. So we go long here and we enter that position and it doesn't work out. So you hedge it short and it goes down. Where do you get out of this? You've got to pick a point to get out of it. Wherever you pick to get out of it, let's say there, and take that profit, use a portion of that to reduce that hedge. When it re-hedges, you're stuck with not just the loss you had originally, but you're now stuck with the second hedge loss. And then it pushes down. And then it bounces back and you get out of that short and you use some of that to get rid of some of this one because you've still got that one on. So maybe you use a bit of that or a bit of that. And then you get down to here and it pushes up. So do you take a long and add to your losing position? And if so, if it goes down, you have to re-hedge it. Now look at the distance of your hedge. You started off with a hedge there, which is fine. You can deal with that. That's not a lot of movement. Now your hedge is that big, right? So when it pushes up inside of this hedge, you have to pick a point in here and make a decision whether you're going to go long or short. This is the discretionary part of hedging. So all you're doing is you're taking a position that was wrong and you're adding a new position hoping it's right. And if it's wrong, you're stuck with two positions which are wrong. Yes, you've made a little bit of profit, and yes, you've reduced a little bit of your hedge. It still doesn't help you, does it? You might as well just scale into the move and wait for the bank. Yeah, this is the problem with it. It all works on paper. There's a guy that's a scientist guy who's done a 100% no-lose hedging strategy, and it's mathematically calculated. I've built an EA to trade it. It fails miserably because it uses martingale. There is no way out of a hedge without it taking weeks or months. So why bother? If you're going to be in a position for weeks or months, just make it easy and just scale rather than having to manage all these little things all over the place. Oh, absolute pain in the backside. For position trading, that is. Yeah. But typical hedging with a portfolio approach, a little bit different. So using Peter to pay Paul type thing, running 6 instruments, intraday hedging, that's a different thing. That's what I'm working on, basically, which is not going to make a fortune because it's going to be very similar to what we do with the SIH. Yeah, these days you're going to get losses, but on the days where you get that one a clean break, that one a clean break, that one a hedge, that one a hedge, these two pay for these two and make a profit. That's the same thing as hedging on FX. But there's ways to get into multiple positions with multiple hedges, which will, anyway, when I've finalized it, I'll show you it next year. But no, you can't automate that strategy. You can't automate anything discretionary. His logic is good, but execution, if you watch his video a couple of times, that guy that did that hedging video, you watch it a couple of times, when you actually get your head around the maths of what he's doing in his back tests, you'll realize that is a perfect scenario he's giving you. You're not going to get that very often. It's like the people that show you the London breakout strategy working 10 times in a row. They don't show you the 30 times it failed. He's shown you one hedge, one back test, and it was a perfect hedge that was easy to get out of. And it still took him 10 or 15 hedges to exit. It's not good, Paolo, when you automate it. Many strategies work, but people never stick to them. Yeah. And that's the other thing with hedging. You need a science degree. Bloody complicated. Really is complicated. The maths involved is unbelievable. Trying to program it, I'm trying to program different scenarios and test different scenarios and robustness test different scenarios. The maths involved is horrible. And the variations in the robustness test, how much do you close out of a hedge? So when you get a hedge that hits a target, first of all, when do you get out? And when you do get out, how much of the money you've made do you use to offset against your hedge? Yeah, 5%, 10%, 90%, 70%, 60%, because every single one of those percentages has got a massive impact on what happens next. Oh, it's horrible. I hate it. But it is profitable. It has got an edge. So I'm investigating it. I might scrap it. You know, it's one of those things. I'd be like a dog with a bone. When I get something and I go, ooh, I go for it and I follow it and I get stuck into it. But 9 times out of 10, I come out of it going, nah. If it's the same as position trading from an edge perspective, and it's going to get into similar sorts of scenarios, there's little point in doing it because all you're doing is you're duplicating your risk, aren't you? So these indices are not going anywhere today. The Dow has pulled back 50% retracement on the move, and it looks like it might be starting to roll over. NASDAQ and the S&P have broken out the highs. So DAX is stuck. We're up at ADR on both of these. So that's ADR. So it's going to struggle to get much further today. So I'm not holding out an awful lot of hope on these today. I'm still going to keep the targets I've got, and I will get out of those there and see if we can get salvage some kind of profit or break even out of these positions. It's not a massive loss, but all three of them basically have got to go somewhere for me to actually want to do anything with these today. This yen has really screwed up everything today. So in hindsight, looking at it, a bit stupid trying to trade the indices after this sort of thing today, isn't it? Market's not interested in anything but this at the moment. So but one of those ones where we should be looking at it going, actually, yeah, don't trade on days where you've had moves like that. Now we know. Sorry, it sounds daft, but looking at retail sentiment, it looks like they're all trying to mean revert. Yeah. Yeah. That's what, well, all retail is doing is yeah. Think about what you do as a retail trader or what you're taught as a retail trader. You are taught as a retail trader to enter a position at a specific point, meaning that the market has to have moved to a point for you to go, this is where I get in. Most strategies are mean reversion strategies. Most of them. So as default, because the market has moved in that direction, retail will always be trying to catch the top or the bottom of a move, won't it? Yeah. Because a strategy relies on a level, typically, for an entry, which means we've moved already. So you will always find retail offside. And it's very hard to get in long on something like this, isn't it? Because it's coming down so hard. So waiting for it to refresh. Come on. So these yens at the moment, the market is already long on these yens. But it was already long before these yen moves started. Look, you'll find that that will get more and more and more up there as the day goes on. What about set a target for 1 ADR in the hedges? There's no point in setting a target on a hedge. You should get out. If you get hedged on something, you get out when the market starts to come back. If you have half an ADR as a hedge and you set your target at 1 ADR, why not take that 2 ADR move? Just use a moving average crossover to get you out, or a parabolic SAR or something. Market reversal alert, short. Yeah. If you are in a hedge, you are saying, I don't know which way this market's going. Do not get out of that move until it starts to come back down again. And then when it does, get in short and re-hedge. And if it carries on, now your hedge is absolutely massive. Nothing you do about it. It's not good. You know, the reason there aren't many people out there that do hedging is twofold. One, 90% of people can't get their head around it. It's too complicated. Two, it's hideously difficult to execute from a trading perspective. So if you do get your head around the maths of it, doing it is just another thing. And most people will try it and run away very, very quickly. Because there are no, it's the same. It's the same as using a stop loss in effect. All you're doing is you're locking in the loss rather than taking it. And you're giving yourself a potential second crack at it. So all you're doing is delaying the inevitable. So you've got to, if you think about it, you've got to know what you're doing to be able to do the hedging. Because it's the same thing. You're still locking in that loss. Like the stock index hedge EA today. The stock index hedge strategy is the same as taking one trade. That's it. So we're saying, right, I'm going to go long. No? Okay. So it's the same as taking a stop loss there and walking off. except you're buying yourself time to have a second bite of the cherry. With hedging, because you're doing it in the FX markets, and typically people do it on the hourly charts, you can have unlimited bites of the cherry, which means you get into unlimited moves, unlimited drawdown, unlimited where do you get outs. Yeah, it's very, 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 very hard to execute. I've tested hedging strategies that use risk reward, and then they use 70% of the profit made to reduce that hedge, and also I've tested all sorts, but there isn't anything that just can do it. You've got to have a human being going, that didn't work out, analyze where we're going next. So what if we go in the same direction as the bank instead of retail and not use a stop loss? Would we be more profitable and use less drawdown? No. Think about it. So if you go in the same direction as the bank on New Zealand dollar CAD, which is long, when do you get out? When these guys shift all the other way? And what if these guys are right? Yeah, just because retail is going, 88% of retail is short on the New Zealand dollar CAD, right? Look at the New Zealand dollar CAD. 88% of retail at the moment is short on this. Okay? It's not going down, is it? But it's not going up either. Yeah, so who's right? We don't know yet. If the Canadian dollar moves massively on positive US news tomorrow, retail are right. So if you're the bank, you're wrong. If there's a fundamental shift, you're going to get run over. There is no way, there's nothing that works. I say this many times, that nothing works and everything works a percentage of the time. So if you want to use retail sentiment, use it. This is what it's on the website for. Yeah. You can use the combined intraday sentiment is the best thing to use. Yeah. So if you've got a +4 on COT and retail is also the wrong way, go that way. So right now, Aussie dollar, US dollar should be shorting. US dollar CAD should be longing. Yeah. US dollar CAD longing, Aussie dollar, US dollar shorting. Yeah. Use that. But at some point, this will be wrong. Everything's wrong at some point. Can't be right all the time. So whether you use a stop loss or not is irrelevant. How you get into the market is irrelevant. How you manage the position after you've entered the market is the thing that makes you the money. Flip a coin. Come onto the website. Pick everything that COT is short on or retail is short on at the moment. Yeah. Give them all a number from 1 to whatever. Yeah. Go onto Google and pick a number at random and enter that one. You've got as much chance of that working as you have flipping a coin. Honestly, it doesn't make any difference. It gives you an idea. It gives you a gauge. You've got to have a way to get into the market. That's all you need. There's a million ways to do that. But once you've entered the market, how you manage the position is what's going to make you that money at the end of the day. Nothing else. What options are on your indicator that show the daily, weekly highs and lows? What do you mean, what options? On support, resistance, propulsion, show the history on the chart, show the symbol and time frame, show the break-even line of your positions, show the propulsion gaps, show the support and resistance lines, and the candle timer. Is that what you mean? And you can select how many weekly and monthly supports you want to see. When I think about it, more often than not, I find I get into 2 or 3 trades per position. So what if we enter a short on a low RSI signal and a long on a high RSI signal? I don't know. Try it. AZ, why are you trying to look for different ways to get into the market? Yeah. Think about what you're saying. If we enter long there, that worked that time. If we entered long there, that failed that time. If we entered short there, that may have worked if your TP was there. If not, it failed. It's a line. It's a squiggly line. It means that something has happened in the market. It has no bearing on what's happening next, does it? The odds of it going up or down from that RSI extension are 50-50. You go long on the RSI high, do it. It doesn't make any difference, does it? What makes a difference is when you go there and you press the button and you press the long button, what do you do when the market drops against you? That's what makes you the money. When you enter the market long or short on the flip of a coin, you either make money or you have to deal with the position. Those are the only two things that exist. I go long, I make money. I go long, I scale in and have to manage the position over a period of time. How I get in has got nothing to do with whether I make money or not. Because whether that RSI short works or not is down to the market, not the RSI, not me, not anything. When an RSI is extended, it's extended. Doesn't mean it's going up or down, does it? Just means it's extended, means it's gone up or down. If sentiment says you should be longing the US dollar CAD and you wake up in the morning at 8 a.m. and you press the buy button, if it goes up, you bank it. If it goes down, what do you do? The strategy you have for trades that don't work is how you make money in the market. Because if you have hit the button and it goes the direction you want it to go, you're going to make money anyway. A monkey can do that. What monkey can't do is manage positions when it goes against him. That's where the skill in trading is how do you get out of the positions or how do you minimize the losses when the trades don't work out? You either take them with a stop loss and go, I will happily give you my money, Mr. Banker, or you manage that position and you get out of it in some way, shape or form, be it using a hedge or a position. The reason for getting in has got nothing to do with making money. You can use it. Go and test it, yeah? Replace this RSI. Go do the position trading bootcamp. Replace the RSI with a CCI. Has absolutely no difference on whether or not you make money because the CCI will work sometimes and it will fail sometimes. Replace it with a MACD. Don't even use an oscillator. Use Bollinger Bands. And every time it gets extended outside of a Bollinger Band, short it. And then when it pushes against you, scale into the position and get out. It'll have exactly the same effect as using an RSI, a MACD, or a CCI, a stochastic, whatever you want. All they are things that tell you that the condition in the market is X and you need something to tell you to do Y at some point. What happens after the X or the Y has got nothing to do with whether you make money or not. It either is a profitable trade or it's you making money out of a bad position in some shape or form. You can use this. You could use the buyer scorecard and say every morning I'm going to hit the buy button on anything that's green. I'm going to hit the sell button on anything that's red. It'll work some days it won't. Out of your control. What options are there for levels to draw on the chart? So weekly and monthly. So you've got the choice of support and resistance settings. Daily support and resistance, which shows you yesterday and the previous day. Weekly and monthly. And you can show as many weeks or months as you want, up to a maximum of 6. There's no point in going back more than 6 weeks because when you go back more than 6 weeks, you're getting into monthly zones. Then you just draw monthlies, because the weeklies are going to be monthly highs and lows. So 6 weeks is the maximum you ever need on weeks. Months, if you go back more than 6 months, they're just irrelevant. There's no point. If you go back more than 6 months, you need to zoom out on your chart, and then you'll look at really old yearly levels and stuff like that. Again, yes, they do work sometimes, but you know, we're intraday, we're trading hourlies and 4 hourlies and stuff. If you're going back to anything over 6 months old, you know, you're going back beyond here. Yeah, so that would show as a monthly line if I move this back to 6. But the problem with going back to 6 is you'll find other lines. You'll find one there, you know, and it'll put that in for you as well. But you'll find a lot of weird ones like that will be a resistance. It's not really, is it? It's kind of, because it's the 1st of August, so it is the monthly high. But you'd look at that and go, well, I'm more interested in the propulsion move or that high rather than that one because it's kind of in the middle. So again, it's a way of doing automated. The best way to do it is draw it yourself. It's going to be much more accurate. I didn't start winning consistently till I stopping my profits. Exactly. Is there a tool that makes reading the COT data much easier? Yeah, my website. There you go. COT data. They're short the Aussie. They're short the CAD. They're short the Swiss. They're long the Euro. They're not long or short on the pound. They're short the New Zealand. They're short the yen. They're long the US. There's nothing else to it. That's basically its positioning of the market. There is nothing else to COT. It literally is a top-down view, 3 monthly swing view. That's it. Again, don't get too involved in COT. Yeah, if you're not position trading, and I don't look at it very often, do I? If you're not trading long-term moves, COT's irrelevant. Yeah, if the positioning on COT is short on something by 80%, that thing is going to go up a lot on its way down. So intraday trading, hourly chart trading, COT is irrelevant because intraday movement has got nothing to do with long-term movement. It will obviously move a little bit more down than it will up. Obviously, that's why we get downward movement. But it will, it doesn't make any difference intraday. Exit NASLongs at 4R, yesterday's high. That's what I'm looking at, I think. Yeah, so I'm up here. We're off to the upside at the moment, so be nice if we can scream up there. Ultimately, at the end of the day, you can press a button at random on 10 charts and then manage them. Yeah. We seem to be on the same side as retail. Yeah, for a while you will be. You're always going to be on the same side as retail at some point. So if you just want to position trade the other way as retail, do that. So go and set the market reversal alert CA up, short on that, short on that, short on that. Or rather, you want to go long, don't you? You want to go the opposite way. But bear in mind that this 88% now, tomorrow morning, could be 65%. So if you go long on this and all of a sudden retail flip the other way, what are you going to do? Because now, if you start off the wrong side of retail, at some point in that position, you will end up on the right side of retail. Because this thing changes every day. It changes every 4 hours. This is updated hourly, this data, yeah? Yeah, last update was 2:57 p.m. Yeah, this will be updating in about 10 minutes. New data will come through. These numbers will change. So if you go long now, tomorrow, that's going to be a different number. 2 days' time, it'll be totally different. That little bit of green could be a little bit of red. So what do? You're in a position the wrong side. Now you're the right side. Do you get out? Take the loss? See what I mean? This is an intraday thing. New Zealand dollar CAD, I'm going to go long on the New Zealand dollar CAD today, and I'm out of it by the end of today because that number is going to change 12 times while I'm in the trade. Can't use it for position trading because if you go one direction on it now and it goes sideways for 4 days and then suddenly spikes and that number is now showing as a 22, that one trade you took 4 days ago is totally on the wrong side. You know what I mean? It doesn't work, does it? For intraday trading, great. But again, it will fail. Look, the New Zealand dollar CAD, you want to be buying the New Zealand dollar CAD today. Let's have a look at what it's done today. We've hit ADR to the upside. Perfect. New Zealand dollar, US dollar. You want to be buying it today? But where? How? When? So I mean, if you'd have said, I want to buy it today there with a stop loss, you got stopped out. If you'd have managed to pick that bottom, how do you pick the bottom? If you're using a stop loss on an intraday strategy, you know, I've tested this. I've built an EA basically that feeds this data here into the EA on a daily basis. If the number is higher than X, we go long. If it's lower than X, we go short. Yeah. I tried it. I tested it. I tested it in here in the live rooms. I was testing it every day. We were coming in. We were checking it every day in the live rooms. Some days it worked. Some days it didn't. There was a strategy where we waited for it to drop by half an ADR. Then we went long. There was a strategy where we just got in basically at about 7 in the morning and we got out at the end of the day, because if that is going to be a buy today, we should be able to get in at some point today and it will end as a bullish candle. Some days it does, some days it doesn't. It will have moved up and given us an exit, but when do you exit? Yeah. Then we tried exiting after half an ADR's movement. Some days that was great, some days it didn't get there. But if we'd have taken quarter of an ADR, it would have been great. But then we missed the 4 ADR moves. Yeah, there is no right or wrong. The only thing you can do is just open up a trade, look at your P&L, wait for it to go green, and then stick it down there. There's no point in trying to systemize a completely random thing. Can't do it. You have to have a way to get in. So you have to have a system, but none of them work, and all of them work at some point of day, week, month, year. It's just the way it is. You just have to get in and wait. And sometimes the market pays you massively, and I have a 30% month. Other times the market goes, not this monthly, off you go, and I have to take a 10% loss. It's nothing to do with me. It's the market. It tells me when I get paid, not me. Buy at 8 a.m., no stop loss, and just position trade from there. Yeah, you can do that. So let's say, for example, you bought at 8 a.m. and you position traded and you got in at quarter of an ADR apart. So the day that it does 200% down, even though it said long and retail that day were right and they got paid, you take a massive loss. Does that pay for all the up days? Test it. But you will have massive losing days if you try to do that. Because the fact that that thing says you've got to go long today and it's right today doesn't mean it's going to be right every day. I've proven it. And it's one of those things, unfortunately, it's very difficult to backtest. Yeah. And this is where people always say to me, what's the strike rate on your system or strategy? Nothing has a strike rate. There isn't a strike rate for a system or a strategy. A strike rate is how often you make a profit on a trade. Your strike rate is based on nothing but where you enter that trade and exit that trade. If you enter and exit there, it's a positive strike rate. If you have a stop loss and you exit there, it's a negative strike rate. If your stop loss was there instead of there, it would have been a positive win. It's all related to your stop and your take profit. There's no way of determining a strike rate on a sentiment. It's just impossible to do because there's no entry mechanism. I've tried them all. You know, I can't shoehorn anything better because it's just impossible. Half an ADR drop, I remember. Yeah, so Brian was probably in here when I was testing it. We were looking for drops and we were looking for all sorts of ways. I tested multiple ways. And at the end of the day, it was just as bad as using a stop. Anyway. What was your percentage gained last month? Last month, uh, 13.4. That's November. Any thoughts on bringing any guests in the new year? Bringing in any guests? No. What would we talk about? I don't know. No, I have not thought about that at all. I'll be a guest. Yeah, Outro can be a guest. No, I haven't thought about that. It's not a podcast. I could do that, but no, I haven't thought about that. Not even crossed my mind. Like Greg Secker. Yes, I could get Greg Secker in. Interview with Greg. Hi, Greg. How's the makeup and teeth? Very good, thank you. What are you trading today? I don't know. Let me put my glasses on and see how much money I've earned from selling educational courses. I don't think I'll trade anything today. I'll just go and spend that. Thanks for the follow, John. Welcome aboard. It's one of those days today. I'm just talking crap today, aren't I? Right. Nothing's going anywhere. Dow's stuck. We are out the highs on the NAS and the S&P. So targets are set on those. It's going to need to go some for me to actually warrant getting out of this. I'm pretty sure I set that down there, didn't I? Didn't. So just under 5R on the S&P. Downside, yesterday's low. Much more chance of obviously getting up there. So I'll be looking to get out there and get an aggressive exit to try and profit on that one. If it doesn't get there, I'm just going to lock these in today. I'm up on the month. Possibly might stop tomorrow as last day. So I'll see how we go. But I'll let those play out. Brian, I'm travelling to London. I'll swing by and make an appearance dressed as John Wick. Yes. That would be quite good. I guess you could open the chat to have people talk on voice. I don't think you can on YouTube, can you? It's not really a chat show. This isn't a chat show. If you want to get that sort of thing, go and watch Trading Nut. But everybody on Trading, I got asked to go on Trading Nut, and I got asked to go on some Swiss podcast. I can't remember what it was called. Those things, it's not until you get approached by one of those you realize what's going on behind the scenes on them. The one in Switzerland was going to pay me $500 to go onto this podcast, right? And he said, you should be able to sell somewhere in the region of X or Y of your products. And I was like, oh, hang on a minute. You want me on just to plug products? And I was like, well, why else would you want to come on? I said, I don't want to come on. You asked me. I thought you were interested genuinely on me coming on. So they're looking for me to go on to give them some content so that they can get earnings from subscribers and from views in return for paying me a little bit of cash and me plugging my products. It's all set up for like Trading Nut. Nobody that goes on to Trading Nut isn't selling something, are they? And Trading Nut himself is selling a load of stuff. That's not what this is about. This is me trading, educating people. It's not that type of thing. That's not what I'm doing. I don't really want to get into a chat type thing either. Quite good fun though, wouldn't it? We should do a Zoom call at some time. That's what it'd be, wouldn't it? Just talk crap on Zoom. When the market's not doing anything. Please go on Trading Nut. No, I don't want to. I like my time. I don't want to do that. You have to plan stuff as well. Right? The guy that contacted me about doing it was like, can you put the slideshow together and so that we can have a look at the slideshow and what we're going to talk about? It's like, I can't be asked. There's nothing in it for me apart from a load of work. And it's like writing a book. People keep saying, why don't you write a book? I've done 25 hours of video content. I could get that transcribed into a manuscript for you, but it's the same thing. I'm not going to say anything different, am I? And it's just a lot of work. Not really interested. Distract from what I'm meant to be doing, which is trading. Exactly, yeah. But that is the thing about trading. People think that trading is a complex, time-consuming thing. It's not, is it? Look at position trading, yeah? I come in here and I might spend 10, 15 minutes looking at ADRs and RSIs. It's all automated. I don't do anything. It's not labor intensive, is it? Which is why I talk so much, because there's nothing else to do. I'm sitting here waiting at the moment for the EuroCAD to go up. I can sit here and watch this all day, but it's not really productive, is it? Watching paint dry is actually faster than waiting for the EuroCAD to hit target. Better off just painting the wall. Well, that's what I should do, shouldn't I? I should just stream myself painting that a different color every day and going, let's hope that by the time I finish the blue, EuroCAD's hit target. Nope. Okay, we're going to do yellow today. I don't know. That's trading. That's what it's really like. You know, if you go onto a podcast, it's like, so what's your strategy? Well, I press the button and wait for the market to go up. So what do you do while you're waiting? Well, if it goes down, I press it again and then I'll wait. So what's the strategy? Well, I'll wait for the market to go up. What if it doesn't go up? Well, I just press it again. Right. Okay. End of podcast. Literally, that's me in a nutshell, isn't it? A little bit more complex than that, but. And you know that if I go onto a podcast, I am just going to get slated because I don't use a stop loss, because the no stop loss gang will be there and they'll all be like, he's a loony, he's going to blow his account, because they won't read anything. When I have a few more thousand followers, hopefully you can come on mine. Yeah, I'm happy to come on yours, Outro. It's got to be worth it. It's got to be worth my while doing it. And not for commercial reasons. Not looking to do it for commercial reasons. That's not why I do it. I do it because everybody that taught me for free. Well, I didn't. I bought a load of courses, but the people that made a difference taught me for free. The ones that knew what they were doing taught me for free. I just have products which help me make a little bit of a sideline, which is lovely, but it's not my income. You know, everybody else that's done Trading Nut, you know, like people like Sean, what's his name? That's not even his name, is it? Forgotten his name. Sean guy. Is it Sean? Mission FX bloke. Nick, his name is, isn't it? You know, if he went on something like that Trading Nut, he would probably sell 50, 60,000 pounds worth of courses. For him, it's worth spending 3-4 days putting something together and going and doing it and that sort of stuff, yeah? Which is lovely, isn't it? But not what I do. Totally agree, your format is professionally transparent. Yes, that's the point. No point in showing you everything working. Look, I'll hide all the SIH trades today because every single one of them's hedged. I won't show any of this. That's what would happen in a normal place, wouldn't it? I won't show you this loss. Because it's, you know, you won't buy my course. Start a flip show. Start a show, flip his chart. Flip this chart. Flip this chart. Flip this account. By the way, this is a long way away, but can you do a live when the US elections are happening and cover the whole thing as the states announce their results? No. I wouldn't have a clue what I'm talking about. Really, wouldn't have a clue what I'm talking about. And the markets will do whatever the hell they're going to do anyway. So if I'm on the right side, brilliant. If I'm on the wrong side, meh. I can talk about how my trades are going up and down. So we could watch my P&L. It would be like non-farm payroll. When you're in multiple positions on non-farm payroll and you see your drawdown go from -8 to +4, back down to -7, up to -3, and it all happens like that. That's what happens in the elections. It swings a lot. So just there's no point. Just wait for it all to settle down. It's the same as any news event, really. New Zealand dollar Swiss 125 ADR. Pushing up again. Swiss franc weakening. Shouldn't have got out of the US Swiss. Oh, yes, I should. No. US dollar's coming down against the Swissy. Aussie dollar's pushing. So this is Australian and New Zealand strength, look. Aussie and New Zealand on the rally. It seems to me the whole of Asia is rallying at the moment for some reason. Something's going on, isn't there, over that way? April ECB cut confirmed again by Goldman. That's more negative euro. Not really doing a lot there. So, David, you turned the EA off until when? Start of January after the new year? Yeah. I haven't turned it off yet. No. It's still running at the moment. I will be. I'm just waiting. It's because it's managing EuroCAD. I probably will turn it off today because I'm pretty much flat now. So I wanted to see. Most years I don't get flat at Christmas. This is quite rare. I'm not flat obviously yet, but this is quite rare to have just a single position on. We're only 2 weeks away. 3 really, aren't we? 2.5-ish, something like that. Next week is going to be normal trading. Fairly normal trading. The week after it will really slow down. So I was planning on trading all of this week and all of next week, but it's all just play by ear. And at the moment, that's it. So there's no point in me taking a new position on something that might last 2 weeks or 3 weeks or maybe longer. So the EA will be going off, and I'll probably will do it today. I was just waiting to see if anything got extended on RSIs, but we haven't had anything, have we? All week we haven't had an RSI extension on the hourlies this week. So there's been no new entries, and the only thing extended at the moment is the one thing I do not want to get involved with at the moment, which is the yen. So it just so happens that this seems like it should be the end of the year. If we'd had a load of RSIs hit on Monday and I'd opened up 3 or 4 more positions, then I would be definitely trading, obviously, those into next week. But we haven't had that. So have to, take it. You just have to take it. If you're in positions and you've got 6 positions on, you've got to manage those positions. If you haven't got them on, you haven't got to manage them. But over the Christmas period, you'll find that you'll be looking at the charts every 3 to 4 hours. You won't be going anywhere because it just kind of flatlines and you get spikes, a lot of spikes where they're reaching for liquidity and pulling back again. So you don't get a lot of movement over the Christmas period most of the time. But then again, this is not normal, is it? What we're in at the moment either. So, but I'll be off. Yeah, I'll be turning it off. And then back January. So turn it back on when I come back, 3rd of January. I've noticed a trend of guru busting on YouTube. I've noticed that as well, Franco. They keep popping up on my feed. So I was watching this guy, this hedging guy, this bloke. This is the Forex Hedge. This is the guy that I was saying about. He's only got like 8 videos and he's only been going for 4 months. But I was watching his stuff. Just looking at how he does everything, and it's exactly the same as I used to do, pretty much. Working hedges from the inside. This is the discretionary part. This is why I was looking at this, seeing if he had come up with an automated version, and he hasn't, because there is no way of automating it. So it's a discretionary thing, which is what this is. And all the time I'm watching these videos, on the right here, I've got these people coming up. There's Trading Nut, look. Exposing, they're not going to find one now, exposing people, basically. No loss scam. I don't know what that is. But yeah, scammers their addresses. But yeah, there's a lot of it going on at the moment where they're sort of, and it's a lot of it is to do with signal services, like the Mamba FX. Can't spell it. But that guy, there you go, this one. I tried Mamba FX signals. That's the one that Brian sent me, I think, wasn't it? Yeah. or someone sent me that one. And I paid Forex scammers for day trading signals, Mamba FX, yeah? Exposed, Mamba FX. There's a lot exposing this guy because obviously, you know, I'm not saying he's a fraud. I've never tried him, but plenty of people have. But he's not the only one. There's a lot of them out there. For me, having been in this industry for this amount of time, if somebody is less than 25 years old, they're a scammer, right? Because you do not learn it that quick, right? If you come out of college, go to university, leave your university and become a successful multimillionaire trader within days, doing it on your own without capital from a bank, you're a scammer. Prove me wrong. If you can't show me a P&L of 3 years solid, which has made a lot of money, you're a scammer. Because this is not an easy job, as we all know. So, you know, anybody that is young, I just look at them and go, because they're not able to do this. Bloody complicated. I might be wrong. You know, there are some people out there that may be super intelligent and have cracked it, but not many, is there? Euro US dollar hourly reversal. Yep. So US dollar getting a little bit of legs. The euro's doing okay today. It won't be doing well up against the Aussie or the New Zealand, but everything else it's holding up well today. Pushing a little bit against the US pairs, but not the Aussies. There is possibly nothing in this world I hate more than the titles and thumbnails of Forex YouTube videos. I know. The trouble is with it, and you look at my thumbnails, yeah? My thumbnails used to be really simple. I had to make them like this, not because I hate this. I do hate this. But when you have them look like that, nobody clicks on them. It really is that simple. That one and the one I had before that, the difference in the click-through rate is like 15% more people click on this one because it's got a bloke with his mouth open than the one I had before, which had text and a chart showing exactly what I was talking about. It's bizarre. It really is. Like this, no one will click on that. No one will click on that at all. People will click on that. It's clickbait, isn't it? This is all it is. It's just clickbait. But if you want to get any of your content on YouTube seen by anybody, you have to put those thumbnails up. Otherwise, no one clicks on it. What about Sam KB? Never heard of him. Yeah, I mean, if somebody puts their results up on a MyFX book or whatever, yeah. Or if they're streaming live every day, you know, if somebody's streaming live every day and showing you every day exactly what they're doing, great. But you look at the people like, what's his name? The Wix guy. Can't remember his name. Wix Don't Lie, is it? I think he's changed his name, isn't he? The guy that owns a brokerage. I can never remember his name. He only ever comes on and he very rarely ever takes a trade. And every time he does take a trade, Raja Banks, that's it. Every time he does take a trade, it's with a ridiculously large amount of money and he goes, bang. And all of a sudden he's made a fortune. If that trade works out, it gets turned into a video. If that trade doesn't work out, it disappears. But you don't see anything like that, do you? You don't see history. You don't see what's going on day to day. You don't see the things playing out. You don't see everything going wrong. You don't see the mechanics behind the trader. All you see is a trade. And if you land on the stream at the time that he takes the trade, you sell. He sells you his course. He signs you up to his brokerage or whatever. That's what it's all about, those people. People like me who just sit here and do this are very few and far between. So if you find people like that, brilliant. But there's not many of them out there because they're all trying to peddle something, aren't they? something usually. I don't know. But I've never heard of Sam KB. I don't know who he is. Is he a YouTuber? My kids laugh when I say I'm a YouTuber. I can't even spell it. Is he a smart money trader? I never heard of this guy. Love it. Does make me smile. You got caught. Anyway. Pan New Zealand ADR. New Zealand dollar screaming away. I'm 50, but 25 at heart. You know what? I read something or heard something a while ago. I can't remember what the age was, but as a human being, you mentally mature at a certain age. It's something in the region of 24 or something. So you get more mature as you get older. When you get to about 24, your mental maturity stops and you continue aging. So even when you're 65, you're actually still 24 or whatever the age was. And I was thinking about it, looking back over the last sort of 25, 30 years, thinking, yeah, I still act as if I was 20 years old. In here, I'm still 20. It's very weird. Age is a number, but mental age is actually something that you get to and your brain stops becoming more mature. Weird. Think about it. Do you imagine like somebody sitting in a nursing home at 85 years old going like that? Inside, they're 20 years old. It's a bit like locked-in syndrome, isn't it? It's a bit worrying. I'm 25, so one more year and I can have the credibility to sell courses. Yes, that is true. Outro. Yeah. I don't know. Everybody I've ever met that's young in this industry, not met, but everybody I've ever seen that's young in this industry is flogging a course based on something that somebody's taught them. I'm pretty sure someone out there is selling my stuff somewhere. I don't know. But it doesn't really bother me. Sam is pretty mature. He has a wife and kid on the way. He's not a member FX style. No, that's cool. Yeah. At the end of the day, you've got to navigate through this world. Yeah. You will always get stung. I still see things on YouTube now and I go, oh, and I follow it and I go, I've not seen that before. And then I look into it and I go, yeah, it's just the same as something else. And there's nothing you can do about it. You've just got to navigate through it. And it's about who you trust at the end of the day. You have got to do the job. You can only get information. It's like when you do any job, there's probably multiple courses out there. Like if you want to become an accountant, you could do an ATA course, you can do an ACA course, you can do an ACCA course. There's all sorts of accountancy courses. They all teach you stuff to do in numbers. Which is the best? They're all good. But one of them you'll probably click more with and is more the type of accountancy you want to do. It's exactly the same as this. There's 1,000 ways to make money out of this thing. It moves up and down and you just got to find a way to extract something. It's very down to who you click with. And if you click with that Sam guy, yeah, it's good. Do it. You can learn and it makes sense. It's got to make sense to you. That's the most important thing about trading. You have to go, that makes sense. If it doesn't make sense, you're never going to do it. You're never going to be able to continue to do it. I'd jump out of a plane in a heartbeat. What was I talking about there, Brian? Too cold for me. I'm in Australia. Good man. Wish I was. Nick Shawn rarely shows losers, and yet he talks about a 50% win rate. Yeah, I don't know about Nick Shawn. I don't know much. I follow his free Telegram channel. Just because I'm interested in the way that he trades. The thing that interests me about his approach is he doesn't use a stop loss. The thing that I don't like about it is it's hedging. The other thing I don't like about it is he charges a lot of money for stuff that I think is utter crap, like compounding courses. $999 for a course that he tells you will blow your account. From an ethics point of view, you shouldn't be selling it. You're literally... And every post he does says, most people lose money trading. Yeah. So he's been upfront. Most people lose money trading. You're going to lose money if you do this. And yet you still buy it. Well, people still buy it, don't they? So there's something, I don't know. Alarm bells ring somewhere along the lines. I don't know why. I don't know anybody that's been in his little group that you pay a couple of £100 a month for or whatever. I don't know anybody that's been in it, so I can't say if it's good or bad. But every post that goes out says, I called all of these live. So if he is doing that, and they are really good, those people must have experienced that. I just don't know anybody. So either everybody that goes in never comes out because it's the best thing since sliced bread, or I just haven't met anybody that's been there. I don't know. Someone go and subscribe and tell me if it's a load of crap. As far as I'm concerned, no, don't do that, because I won't be responsible for sending you to someone that's going to tell you a load of crap. As far as I'm concerned, none of them make money except me. No, lots of people make money. They just don't show it. That's the thing. Most people, this is the thing that annoys me. When people come into the Telegram group or they come into the YouTube channel and they say, I've got 6 funded accounts. It's like, I've just bought your market reversal alerts indicator. I've got 6 funded accounts. I'm looking for a way to trade with it on funded accounts. If you've got 6 funded accounts, 1, why are you in the Telegram channel? 2, why are you spending $49 on an indicator? 3, well, that's it. Why? Yeah. If you're making money with 6 funded accounts, you're just doing your job. Yeah. Anybody that comes out and brags, if you like, in that way is, to me, an immediate alarm bell. But lots of people are making money, but most of them are just doing it. There's a lot of Telegram channels and a lot of Discord channels you'll find out there with a lot of traders just talking crap. Those guys are making money because they're just there talking crap, because they're doing the same thing as me. They're trading and they're bored stiff. Those are the ones you want to be tapping into. I have a master's in accounting. Oh, David, look at you. I used to work in recruitment about 30 years ago, which is why I know about, I used to work in recruiting accountants, which is why I kind of know about ACCA and ATAs and all that sort of stuff. In a past life. The only thing that makes sense to me in trading is trading probabilities. Yeah. It's all to do with probabilities. Nick only started hedging about a year ago. I was subscribed to him for a year before that, and he was a losing trader. He sucks. They all suck. Watch me. Yeah, exactly. Yeah. Yeah, I mean, this is the thing. He was a losing trader selling courses. He switched over to a different strategy. What does that tell you? He's trying something new. Do you think he's back tested what he's doing now over a long period of time? Is he hoping that it works and he can sell enough before it stops working so that he can go and do something different and sell that? I don't know. This is what seems to happen, isn't it? I've got a video on the website about it, about how everybody repackages stuff over and over and over again. It just happens. Can I please analyze Swiss yen? I can't. No, I've no idea. No idea what's going on with the yen. It's just all the yens are mental. It's just reversed. You just had a reversal alert on the 5-minute. I have no idea what this yen's doing. It's on parabolic mental mode. today. All yens, you can see by the ADR. The ADR dashboard is mental. Look at the weeklies. We're at 175% of our weekly range on most of these yens, 150 on the rest. Is something going on with it. I don't know what it is. The Japanese came out last night and said they're going to increase their interest rates from negative 0.1 to 0 or negative or 0.1. That doesn't warrant this, I don't think. I think this will be back up here next week, maybe even tomorrow. I doubt it will do this again. I doubt it will do the whole thing. It might do. I don't know. We've got non-farm payroll tomorrow. We could easily get a 200 ADR move on anything tomorrow. They will use the unemployment rate to drive whatever they want to drive. So they could easily scale out of this entire move tomorrow and profit take the lot. Everybody that has got stung on the way down has added to all these positions for them is fair game on the way back up. So, don't know. To me, I would do nothing but long this because it's very unlikely this is going to be able to go much further because there's not going to be anybody left wanting to long this as an institution. So it can only really go one way, which is them scaling out of that move, I think. But I'm always wary of steam trains like this because often it will do that and then it does that again. You need one more news catalyst. Let's say, for example, tonight Ueda comes out and says, or Suzuki comes out and says, we've decided actually to go to 0.25 and we're going to do it in January. That thing will be down 400 ADR tomorrow. So, I don't know. I'm winding down. I'm not interested. That's the same with Tom H. The stats he posts and what I witnessed does not stack up. I don't know about Tom. I mean, I follow Tom's group. I don't follow Tom, obviously, because I'm here. And I can't follow him because I'm here while he's doing his thing. He trades the same time. So I've never really looked at his calls. I don't know about. I mean, he's not a signal service. He's like me. He shows you what he's doing, but he doesn't show you. He tells you, and I can understand where there's a disconnect there. I don't know, but he's not selling anything, is he? So what's the what's in it for him? This is the thing. There's nothing in it for Tom. Yeah, he sells a book. He's written a book, but he's been doing this for years before he wrote his book. And he does the odd talk, which he gives all the money to charity for. So he doesn't earn any money from anything to do with telling you anything. There's no hidden agenda. So why do it? That's my thing. I don't understand why he would do it. He comes from a brokerage background. He knows how the market works, and everything I see him do makes sense. But the actual statistics I've never looked at. I've never tried to match up what he's got in his Telegram channel with what he puts in his results. But that's just because I haven't bothered doing it. And I can't be bothered. Be interesting though if someone's done it, if someone's compared what they've done and what he's done. But my argument is always, if you were watching me today, this isn't a good day because it's hedged everywhere. But if you were watching me today and let's say that triggered long, pulled back, and then it pushed, if you'd have missed that and you'd got in there or there or there, you're going to get a different result to me on that trade. And when I get out here, you will have been making a cup of tea, and by the time you get out, it will be here. You're going to get a different result to me. So You're never going to get the same. This is why signal services don't work, because this, as you know, is pip dependent. Whether I get triggered on a long is down to the pip, the spread, and exact placement of an order. And some days you will be long on it and I won't have got triggered. Those days I will make $2.5 grand. You will lose $800. Nothing right or wrong with anything that you see me do or that you do individually. It's your result. It's a different result. And whatever is published by someone is never going to be the same. I mean, P&L is a P&L. You know, this doesn't lie. This thing is what this thing is. This thing is my account history. That's, you see it every day. You don't see anything from certain other people, do you? That's where I can understand there's a disconnect. But that's down to you to do due diligence on and check out. Tom is great. He loses and wins. Yeah. And he is a high stakes. Yeah, he is high stakes. I mean, what he does is not for the faint-hearted. You know, it's not. There's very few people that can do what he does. The difference between a button press and 5 seconds for Tom is a huge amount of money. The difference between a button press and 5 seconds for me is $50, $100, maybe. Yeah, he openly states he's yeah. Yeah. I mean, it's a very different style of trading, and it's very, very discretionary as well. My strategy is very fixed. It's the open, it's the range before the open, and it's the opening range. That's it. Very simple. And there's no woolliness about it. It is taking a break of a range. That's it. Whereas other traders like Tom are very discretionary. He'll look at the chart and he'll be going, I'm going short. Why? Because I like the look of that wick. You can't test that, can you? It's just discretionary. You're a very good teacher. Wish you were my teacher. I would have passed my 11 plus. Yes. I'm not a very good, I don't know. I don't really, I'm not a teacher. I'm me. I'm a programmer, but I just am very rational and I guess straight to the point. There's no woolliness, is there? I tell you, it's totally, you know, I haven't got a clue. Totally random. That's the best lesson you can learn. Tom H taught me this is busy, not a video game. What was that, Franco? You removed it. This is a business, not a video game. Yeah. He had winning months, taking his account from 100 to 300K, and a few bad months, many trying to be accountable to people in his Telegram. Yeah. That's the difference, I think, between people like Tom and people like me. I'm accountable to me, and I'm doing this for me. I'm not doing it for you. I do what I do in here for me, and I show you it. And all I'm doing is showing you what I do. I'm not a signal service. I built a product which I use, and you can use, but it's down to you what you do and how you make your money, isn't it? Basically, if you're in the EuroCAD with me now, you're probably in similar position to me. You may not be, because you may have pressed a button here that made a massive difference to that position. That button press that you made there isn't right and it isn't wrong. It's different to me. That's all there is. Different. Trading is different. The difference between entering the stock index Hedge EA with a pip offset of that and that is different. It's not better. It's not worse. It's just different. Everything in trading is a flip of a coin. And it's different. You're lucky or you're unlucky. You're skilled at holding or you're not. Or the phone rings, you have to go off and take a 20-minute phone call. You come back and it's moved 300 pips. That's not a good trader. That's just lucky. But luck is a massive part of this job, isn't it? If this thing flies up now and hits my target and puts a big wick in and drops down and gets me out of the position immediately, that's not skill. Just the market paying me or not paying me, depending on which way it goes, isn't it? It's nothing to do with me. It's not my control. It's the market's control. Tom taught me to take trading like a business, with a business mindset, not a video game. Yeah. Which is what annoys me about all these prop firms out there that have, that look like computer games. It's not a game. And everybody that treats it like a game is gambling at the end of the day. And there's nothing wrong with gambling. Yeah. I like gambling. I used to bet on the horses all the time. I don't do it anymore. I like going to the casino. I love playing cards. I like playing poker. Yeah. I can't do it as a living. You can do this as a fun thing. And the people that want to do it as fun, there's nothing wrong with that, is there? But if you want to make money out of it, you have to treat it like so. And you are going to have business decisions that are bad and business decisions that are good. You have to treat it as such, which is why I said right at the beginning of this stream, your account is drawdown. There's nothing wrong with going into drawdown on your account. That's what it's there for. If you've got 100K, the purpose of that 100K is to be reduced with the ability to make you money. You shouldn't be scared of going into drawdown on it. The whole point of going into drawdown is to allow yourself time to make money in the market. Controlling the risk. That's all it is. It's a business. You've got to treat it as such. If you go long and then go long and then go long and then go, screw it, I'm going to go long with 15. That's a video game. That's not sustainable, is it? Patience. Get rich slow. Exactly. Yes, it's a get rich slow scheme. Like that. Get rich slow. Anyway, I've got to go. I've got a class to get to. Looking for that to get up to there. That's it. I'm going to turn the EA off in a minute. So I'm not going to take any more trades this year on the position trading side of things. I'm going to trade stock index hedge this week. I'm also going to trade it, I think, next week as well. Or trade the open basically. But I won't be taking any more positions. But I will do all the analysis still. There's no point in getting into new positions now because I just want to be flat as I can for Christmas. So hopefully we get a move on the Euro CAD tomorrow. If it gets to break even, I should probably just go flat. 5% month is all right. Consider money trading half the month, half the profit, half the month. That'll do. I'll be back tomorrow morning, 7:50 for Frankfurt. Tomorrow afternoon for the New York as usual, 2:20. If you need anything, I'll be in Telegram. Although I've got 16 messages to look at now in Telegram anyway. So I will be in there and I'll be back tomorrow morning or tomorrow afternoon, depending on where you are. So anything you need, let me know. Otherwise, have a good afternoon. Good luck with these getting out. I will be monitoring these. Doesn't look like it's good at the moment, though, does it? So I'll post in Telegram what happens with these anyway. So, all right, have a good one. I will see you guys next time.